All right, let's get ready for a real financial face-off. We're pitting two absolute giants of India's pharmaceutical world against each other, Laurus Labs versus Divi's Labs. This is going to be a clash of strategy, numbers, and, just massive potential. So let's dive right in.
Okay, look at this. It all kicks off with this single, powerful number, 7x. What on earth could be set to grow 7 times over in the next few years? And, maybe more importantly, what's it got to do with our two contenders?
And boom, here's your answer. We're talking about the projected growth of India's CRDMO sector. That's Contract Research, Development, and Manufacturing Organization, if you're curious. This whole sector is just set to explode. We're talking from about $3.5 billion today to over $22 billion in the next decade. That is the massive prize these two companies are fighting tooth and nail for.
So, with a market that lucrative on the line, let's go ahead and meet the two main players in the field.
And right off the bat, you can see their core strategies couldn't be more different. It's fascinating, really. On one side, you've got Laurus Labs, who I'm calling the integrated all-rounder. And on the other, you have Divi's Labs, the focused specialist. This is a classic battle, isn't it? Breadth versus depth.
So let's break down Laurus Labs' approach first. They are what you would call a totally integrated pharma player. What does that mean? Well, it means they offer complete, end-to-end solutions for their clients all over the world. They're playing in multiple areas: CDMO, APIs, formulations, even biotech. Basically, they're aiming to do it all, the whole shebang.
Okay, now let's flip the coin and look at Divi's Labs. Divi's has a laser focus. They are global specialists, and I mean specialists, in complex APIs, that's active pharmaceutical ingredients, and custom synthesis. So instead of trying to do everything, their goal is to be the absolute best, the undisputed king in their very specific, very high-value niche.
All right, so we've got the strategies down. Now, it's time for the main event. Let's get into the clash of numbers. This is where we see how these totally different game plans actually translate into financial performance. Okay, for round one, let's look at pure top-line sales growth. And wow, this really shows you the kind of momentum Laurus has right now. In a recent quarter, their sales shot up by an incredible 35% year-on-year. That's huge. And it was driven mostly by their strong API and CDMO segments. Now, Divi's also grew, but at a more modest 16%. So yeah, on the growth front, this is a clear win for Laurus.
But, as any savvy investor knows, huge growth numbers are only one part of the story. A really important part, for sure, but it's not the whole picture, not by a long shot.
And this is where things get really interesting. This slide completely flips the script. When we look at operating margins, which is basically how efficiently a company turns its revenue into actual profit, Divi's Labs is the undisputed champion here. A massive 33%. That just towers over Laurus's 24%. This, right here, is the power of specialization in action.
So let's let that sink in. The crucial takeaway here is that because of that much better margin, Divi's actual operating profit is nearly double that of Laurus. And that's even with lower sales growth. What does that tell you? It tells you they're just a remarkably efficient, profitable machine.
Okay, so we've looked at growth versus efficiency, but there's a third, absolutely critical piece of the puzzle we have to talk about: the price you pay for the stock. I mean, a fantastic company can be a terrible investment if you overpay, right? And that brings us to the risk of a pricey deal.
Let's kick things off with the classic price-to-earnings ratio, or PE. And just look at this chart. It's kind of wild. The industry average is sitting around 32. Divi trading at 69 times earnings, and Laurus is at a staggering 80 times. Both of them are commanding a massive premium. That tells you the market has incredibly high expectations baked into these stock prices, probably betting on that huge long-term CRDMO growth we talked about at the beginning.
And it's not just PE. Let's look at another metric, price to sales. The story is pretty much the same. The industry average is just over 3. Laurus is trading at 8.6 times sales, and Divi is at an even higher 17 times. Again, it just proves the point. The market is betting very, very big on the future of both of these companies.
And here's the final twist in the tale, the thing that makes this whole comparison so fascinating. The market is giving them these super high valuations even though, and this is a big even though, both companies have had their margins fluctuate in recent years. So think about that. Investors are paying a premium price for businesses whose profitability hasn't even been perfectly stable. That definitely adds a layer of risk to the whole equation, doesn't it?
So, there you have it.
We've seen the explosive growth of Laurus Labs pitted against the incredible surgical efficiency of Divi Labs. And all of this is happening against a backdrop of some really sky-high valuations. Which brings us to the final question, the big one. What's your verdict?
So where do you stand? Do you bet on the all-rounder, Laurus, with its incredible growth engine? Or do you go with the specialist, Divi, with its fortress-like profitability? Which one of these stocks do you think has more growth potential from here? It's a tough call.